Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Gabby Donald and Paul Noble.
Hi, and welcome to The Tax Factor, the UK's top tax podcast. I'm Gabby Donald. This week, I'm joined by a new voice and a fellow Blick Rothenberg partner, Paul Noble. Welcome, Paul.
Hi, Gabby. I'm looking forward to it. It's like my first day at school.
Well, let's hope we can ease those first day nerves, Paul. After our special edition with Max Schofield and last week's 100th episode, we can't escape the budget any longer. It's been another busy week in tax, with headlines dominated by talk of reform, fairness, and what's shaping up to be a major budget later this month. But before we get on to this week's stories, let's take a brief look at the top tax headlines.
The Tax Factor. Headlines.
Let's start with an interesting update on making tax digital. The Institute of Chartered Accountants in England and Wales has this week said, while awareness among businesses and agents making tax digital for income tax self-assessment is improving, many expect increased costs and time pressures without clear business benefits. The ICAEW's latest survey shows that awareness among businesses and agents of the upcoming MTD ITSA regime has risen in 2025. Just over 46% of respondents said they were aware or very aware, up from 33% in 2024. Despite this, a very large majority, around 65%, do not expect making tax digital to bring any tangible benefits for their businesses or clients. At the same time, more than 40% of respondents believe that making tax digital will lead to a significant increase in costs and time pressures. In other words, more people know about the changes coming, but many remain unconvinced it will deliver benefit and worry it will impose extra burden instead. There is a lot of work for HMRC to do, both in awareness and convincing, if at all possible, a business that it is an initiative that has benefit for them.
It's interesting, Paul. I'm sure HMRC won't thank me for saying this, but I actually have clients who refer to making tax digital as making tax difficult. And I'm sure it's not that bad, but it won't be a surprise to many this week that the budget has been in the headlines again, with Rachel Reeves' extraordinary breakfast briefing this week dominating the news. Now, Reeves herself has hinted this week that tax rises are on the table in her upcoming budget, despite earlier promises in the manifesto to avoid hikes in income tax and VAT. She's now warning that tough choices are needed to deal with the rising national debt and sluggish productivity. Now, both households and businesses are bracing themselves for potential changes.
Thanks, Gabby. Our CEO, Nimish Shah, who is presenting a special live stream event on Budget Day, more on this later, has said that he feels the budget is different this time and that we have had a clear signpost that the manifesto promise will be broken and income tax rates will increase. Unfortunately, he says they will also play the broadest shoulders card, and we will see several changes aimed at the wealthy, which will raise very little in reality, but cause more long-term damage to the economy. His summation, just under 4 weeks out, is that he thinks it will be all bad news in a few weeks, sadly.
There's a third headline. It's one that's very much linked to the budget, about fairness and perception of fairness. The Treasury has been criticised for suggesting that working people are those earning £45,000 or less. And it's interesting because obviously some news organisations, including I think Sky News, have looked into how this plays with public perception. And the Sky News poll found, for example, that nearly 80% of people think that figure is far too low, which really highlights how disconnected people in the Treasury are with people who are actually feeling the reality of UK living costs. What do you think about that, Paul? Do you think £45,000 is too low a definition for working people?
Well, I can see where the £45,000 came from, because that's around the upper earnings limit for national insurance purposes. But actually, yes, I agree that there are many people who would classify themselves as working people who earn above £45,000 and significantly above £45,000, especially in London and the South East, where incomes can be significantly higher than that.
And I think particularly when we consider how long many of those thresholds have been in place, and when you balance that against the sort of inflation that we've experienced since then, and also obviously, sort of the fiscal drag that people are facing with falling into higher tax thresholds whilst actually not feeling comparatively better off. So I think I would agree with that as well, Paul.
Yeah, you're absolutely right to pick up on that, because the thresholds have remained static, and and yet incomes have risen, and working people can, in a lot of instances, earn more than £45,000.
Yeah, that's interesting. I mean, segueing again into some of the other top stories, drawing out this theme of the speech that we had from Rachel Reeves. Personally, it doesn't surprise me that they've made this speech. I mean, there's been a lot of talk about the government pitch rolling some of the perhaps trickier decisions that they're going to have to take at the budget and preparing the ground for tax rises. And in fact, I think there's been a lot of speculation that they are going to have to break those manifesto commitments and raise one of the main taxes. I don't know about you, Paul, but me personally, my money is on an increase of some kind in income tax. And personally, I think it probably has to be some kind of increase to the basic rate, because it looks like one of the only options that's going to be available to the Chancellor to actually raise the kind of revenue that they're looking for, if we're being perfectly honest.
No, I agree with that, actually. And given that we're recording this tax factor on the 5th of November, I'm not expecting too many fireworks tonight, but maybe at the end of the month they will be upon us. But yes, I mean, it's quite unique in the speech that happened this week, sort of laying the ground this far out from what is a very late budget this year. It's symptomatic of the government, Treasury, signalling what their intentions are in terms of raising tax in the budget and looking to test the waters both with public perception and the markets in general.
Yeah, I think that's interesting. Perhaps we will see some of those manifesto pledges on the bonfire, thinking about the other main taxes that the government has committed not to raise. One very dear to my heart, of course, VAT. I personally I find it highly unlikely that the standard rate of VAT will be increased. The effect of doing so would probably be inflationary. It would also probably as a consequence of inflation, have an impact on the sort of markets as well. So my sense is that feels quite unlikely. What I probably would like to see from a VAT perspective, but I'm certainly not holding too much hope for, would be probably a bit more of a broader view of reform of VAT. Tax is very complex. We hear a lot actually on a week by week basis of, I'm going to call them comedy VAT cases discussed in, sort of articles, podcasts and other commentary. But to be perfectly honest, for many, the complexity within the UK VAT system is no laughing matter. So there is actually a very strong case for reforming the scope of the tax, whilst perhaps linking that to maybe a reduction in the headline rate. I also think that there'd be a really good opportunity for the government to look seriously at the VAT registration threshold. There's been a lot of discussion about the way in which it inhibits growth. And I think that that's something that certainly merits a more detailed look. Although we're talking a lot about potentially big headline grabbing tax raises, I think we will probably also see some tinkering with some of the inverted commas smaller taxes. So go on, Paul.
Undoubtedly, yes, I agree with you, Gabby. We will see some tinkering around the edges, but it will be those big taxes or those big revenue generating taxes that will capture most of the headlines. And let's face it, we're having to discuss these because we're in a situation with a Chancellor that has one hand tied behind her back, not having been able to push through welfare reforms, cut costs, and therefore in terms of moving forward, it has to be revenue generating ideas that need to be pushed through this budget.
And when we look at actually even some of the measures around income taxes, so if we look at, say, increasing the additional rate or the higher rate of income tax, it actually really doesn't raise a tremendous amount of money. It does leave her with limited options.
I think the thing that's really frustrating for me is we're moving into a darkening period of the year. The clocks have changed. We have all of this ongoing speculation regarding tax and regarding tax generation. Most of the headlines that you see in the newspapers seem to be rather doom-laden. We're not seeing a lot of news that is perhaps looking at the more positive aspects of how we can encourage growth and investment in the UK. Roll on Christmas, as far as I'm concerned.
Get the mulled wine out. And actually, Paul, that's a really interesting point, because we have focused very strongly on sort of the potential tax measures. Do you have any thoughts on how the government might want to approach growth at this budget?
Well, I mean, I'm not seeing an awful lot of detail in the press regarding how they might encourage growth. And I think that's one of the pledges the government came in with last year, that their differentiator, if you like, was to encourage and stimulate growth in the UK economy. And alas, at this point, we're not seeing an awful lot to stimulate that.
So just moving on, one of the other options available to the Chancellor could be to, I know it's not one of the big ticket items, but looking at perhaps taxes on betting and gaming. I know the government has already been considering reform of some of the taxes that apply to the betting and gaming sector. And it's interesting. It's a complex sector of the economy from a tax perspective, in addition to corporate taxes, employers' national insurance, irrecoverable VAT. The betting and gaming sector is subject to general betting duties, remote gaming duties, machine gaming duties. So it's a really complex landscape, and one where perhaps there is scope for reform. But I think it's going to be really interesting in terms of if that was an area that the government chose to focus on. And I appreciate that there are big arguments out there in terms of perhaps the social impact of problem gaming, for instance. But if we were to increase taxes on that sector, it obviously has to be very carefully weighed in terms of looking at the sector as a whole. It employs more than 100,000 people on the high streets and beyond. And then also thinking, I guess, it's not always as simple as to say, well, we'll increase the tax and then less people will gamble. Actually, will it just drive behaviours? So could it drive people away from the regulated sector and into the black market? So it's another interesting area which could become a focus at the budget or beyond. And it's certainly complex from a sort of business taxation perspective. But I think, Paul, you've seen some complexities in terms of how those engaging in betting and gaming can have when they are interacting with the tax system.
Oh, yes, Gabby. And just before I talk about that, yeah, I agree with you. There's a lot of speculation around whether there's going to be changes and a lot of lobbying in relation to carve out specifically from the horse racing industry here in the UK. But what I wanted to talk a little bit about is just remind ourselves really about gambling and how tax impacts gambling. Because I've had a recent inquiry in my day job in relation to a professional gambler and whether what he receives from his activities are taxable. So just a bit of a reminder around gambling and tax. So in the UK, are gambling winnings taxable? In short, the answer is no. So if you win on the Grand National or the National Lottery, you aren't facing a grab from the Treasury. What about professional gamblers? Gambling is not viewed as a trade, so again, winnings are tax-free. But things can become a little bit more complicated if someone receives sponsorships, appearance money, advertising income, because this would be classified as income and therefore be reportable on somebody's tax return. What about what people do with what they win from gambling? So if you invest and sell assets, then CGT may become applicable. And any investment income is also subject to income tax. Any advice for people out there that have gambling winnings, which certainly wouldn't include me? If you have sizable winnings, keep a record to show that it's not the receipt of taxable income. So if the taxman does come knocking at some future date, you can show them that you won it on whatever takes your fancy, whether it's poker, horse racing, or the National Lottery.
Some really useful tips there. So from one type of gambling to arguably another sort of, I guess, pet area of ours, Paul, crypto assets reporting and enforcement. So this is an area where I think we've seen a lot of complexity and actually some recent announcements. The taxation of crypto assets is hugely complex. It's an area that is fast evolving, and it's a challenge to tax authorities globally, so not just to HMRC. It's fair to say, I think, as well, that a lot of tax rules have not kept up with the advances in technology and also the wide variety of asset types available. From my perspective, I certainly see that there's very limited guidance available to individuals, to crypto businesses, to help them to understand and determine the correct location in which crypto assets should be taxed and how they should be treated for tax purposes. And that's both from a direct tax and a VAT perspective. a hugely challenging area from my point of view. But I know you've spent some time looking at this, Paul.
A lot of the guidance that there is around the taxability and reporting of crypto assets is set out in HMRC's Crypto Asset Manual. But again, we're looking at an area that is evolving and changing quite rapidly. HMRC do view crypto and the crypto markets as a bit of a wild west. Their concerns largely that around the hiding of ownership of assets and the lack of reporting of taxable transactions. So, I mean, recently HMRC have sent out a series of nudge letters to people that they think hold, or people that they know hold crypto assets, on the back of information that they've received from crypto exchanges, asking people to certify whether their tax affairs are up to date or not. This is all going to change from next year, because what we've been dealing with up to now is very much a reactive position where HMRC receive information from crypto exchanges when they request it. But from January next year, the crypto asset reporting framework is coming into effect. This is a reporting framework introduced by the OECD and will require intermediaries to provide information to HMRC. Intermediaries defined as reportable crypto asset service providers. That trips off the tongue. And it's going to be introduced, as I said, from January 2026, when the said reportable crypto asset service providers will start to collect user data and transaction data. And then from the 31st of January 2027, they will have a deadline to register with HMRC's reporting portal. And then from May 2027, automatic information will be reported to HMRC from these crypto exchanges. And what we'll see from then on, I guess, is probably far more increased compliance activity, because HMRC will have more information at their fingertips. We might see a few problems as well, because one of the issues I can foresee coming is a problem around non-alignment. Non-alignment in the sense that the said reportable crypto asset service providers have to report on a calendar year basis, 1 January to 31 December. Yet we live in a world where we have a UK tax system on an April to April basis, and therefore there will be mismatches in terms of what's reported for a calendar year to the tax year.
And is this an OECD initiative?
Yes, it is. The OECD have brought this in, very similar to the Common Reporting Standard, where we've had that in place since 2014 in terms of reporting financial transactions. Crypto assets were specifically excluded from CRS when that came in, and this is in effect a bit of a catch-up exercise. But HMRC here in the UK have taken matters one step further, in that it's not just going to be international data that's gathered under the framework, it's going to also be domestic reporting as well.
So basically HMRC and tax authorities more generally will be getting a tremendous amount of information on individuals' crypto assets. So I think it sounds as if we can expect in the years ahead more inquiries into the tax treatment of crypto assets and whether tax has been paid and declared in the right places.
More information equals more inquiries, equals more questions for people who have crypto assets.
Wow. So definitely, I think something for people to be aware of there.
Blick Rothenberg, celebrating 80 years.
So I think that's all we've got time for this week. My thanks to Paul Noble for joining me.
Thank you for being with me here on this, Gabby.
So next week we'll be joined by Paul Hayward-Schiefer and Tom Goddard.
This year we're taking our budget coverage to the next level. We're proud to announce for the first time we'll be broadcasting an exclusive live stream from our Covent Garden studios on Budget Day at 3 p.m. Hosted by journalist and broadcaster Simon Gompertz, the live session will feature Nimesh Shah, CEO of Blick Rothenberg, alongside a panel of our leading tax and economic experts. They'll be discussing the Chancellor's announcements and their analysis of the budget detail. You can register to access this exclusive live stream on the Blick Rothenberg website. Just follow the links on the homepage.
And if you want to stay ahead of the latest tax news and insights, you can head over to the Blick Rothenberg website, where you can also sign up for updates on key topics. If you've enjoyed the podcast, please subscribe and give us a rating or review. But from us, it's goodbye and have a good weekend.
Goodbye. Goodbye and thank you.
That's the Tax Factor. Since launching in August 2023, we've become the UK's top tax podcast in the UK podcast chart. Join us every Friday for expert insight on the latest tax news. Subscribe on your preferred podcast platform or listen direct on the Blick Rothenberg website, where you can also find the latest updates and analysis. The Tax Factor from Blick Rothenberg. Copyright 2025.